Hello, I'm Donald Leggett and welcome to this edition of Share Views, brought to you by London South East. I'm joined in the studio by Hayden Locke, CEO of Emmerson, the AIM-listed group whose primary focus is to develop the Khemisset Potash project in Northern Morocco. Welcome, Hayden.
Thanks, Donald.
Okay, welcome to the London South East studio.
Thank you.
Okay, so let's start with potash, if we may. What are the primary uses for potash? What's the market size, the potential for potash, and what's its market price currently?
So potash is the name used to describe basically any sort of fertiliser that has a high concentration of potassium in it. There are multiple different groups of potash mineral that's used predominantly in fertiliser. The one that we're focused on is called muriate of potash, which is the largest potash product in the global market. Total market size this year is expected to be somewhere between 65 and 67, 68 million tonnes. Another record year of demand, I might add. And the price depends on which market you're looking at, but the price in Brazil, which is a market that we're looking at, is around the $360 a tonne delivered to the market price. So relatively good price for a project like ours.
Okay, where is it found in the world? Who are the major producers? And what is it about the Khemisset project in Northern Morocco which makes it special in your view?
So the major producers, there's two real geographic locations that about 70% of global supply comes from. That's the middle of Canada and Russia and Belarus. Those guys have been dominant producers for the past sort of 50, 60 years. There are a number of other potash producers around the world, but one of the key things to remember about potash is it is an incredibly tightly controlled market. So up until recently, there were 10 producers outside of China globally. Vale recently stopped producing potash, so now there are only 9 producers outside of China, so a very, very tightly controlled market. The Khemisset project is very interesting. I think it probably to take a step back, there have not been very many potash projects built in the world. The main reason that they haven't been built is because they have typically very, very high capital costs attaching to just taking them into production. We're talking multiple billions of dollars. The last potash mine that was built in Canada was over $4 billion. So an enormous project. The real benefit that Khemisset has is it is much, much lower CAPEX than most of its peers. So we're talking less than 10% of the total CAPEX of the last project built. We're about around $400 million. And then the second key driver that makes Khemisset unique and in our view an exceptional project is as a result of its location, it will be very competitive on a delivered cost basis to any of its target markets. So we're talking bottom quartile delivered costs to our target markets, which means we're competitive with all of the producers globally.
So what are the big agricultural markets in the world and which ones are you targeting?
So the agricultural markets are very widely spread, but I guess you can focus in on probably 3 or 4 key markets. China is obviously a big one. They're the largest consumer of potash, but not the largest importer because they have some potash production in China itself. Then the US is a large market, consuming about 9.5 million tonnes per annum. Brazil is the largest seaborne market for potash globally. They consume about 10.5 million tonnes a year. That's a very, very important market globally. And then Southeast Asia, the rest of Southeast Asia is a very large market. You've got India, a little bit in South Africa, and then northwestern Europe. For us, what we really talk about strategically from our project is our competitive advantage lies in the fact that we're very close to our end markets. So we will only focus on those markets where we have a competitive advantage. And for us, that means anything on what we like to call the Atlantic corridor. So that includes Brazil, that includes Northwest Europe, that includes the US market, South Africa, but perhaps most importantly, it includes Morocco, which is where our project is located, which is a top 5 fastest growing nations for importing potash in the world. So we're talking 70% faster growth than the global market for potash in Morocco. So very, very high growth rates in our local market.
Okay, so let's regard that as our potash primer. What about your business? You published an environmental baseline study yesterday. It was very positive for Khemisset. It showed no areas of concern. Next steps, presumably a full environmental and social impact assessment. How are things going with that? And how does Morocco regard environmental regs?
So yeah, it's a fantastic first step in terms of the environmental assessment of this project. What we see in the mining industry a lot is companies get tripped up by certain fatal flaws that occur in their projects, and they haven't necessarily checked whether or not they will be able to even develop the project that they're contemplating. So for us, doing this baseline study really did a fundamental assessment of whether or not we can actually build what we were contemplating in the scoping study. The results were favourable. That gives us a lot of confidence to continue to aggressively pursue our development milestones, but also go into that environmental social impact assessment.
So you think this is a big deal for you?
Yeah, it's among of the many things that we're doing with the company, it's definitely an important phase of our development, and it's a step that we can't skip. We absolutely have to go through that if we're serious about building a potash mine. So really happy with the results thus far. In terms of an operating environment, Morocco is fantastic. Its mining industry is, I would describe it as nascent, so it's early stages but growing. But what we see from the Ministry of Mines in Morocco is a commitment to supporting companies like us, but also supporting that environmental best practice and sustainability processes that go into building a mine that can have positive benefits and limit those potentially negative benefits.
And there's no sense of you being seen as an outsider in Morocco?
No, we've been welcomed with open arms. And I think that is really a clear shift in Morocco's mindset under the current king. Is they're doing everything that they can to try and attract foreign direct investment, specifically in the mining industry, and so they've been very, very helpful thus far.
That's very positive. It's a big project. How much is the overall estimated cost of the mine? What are the funding requirements to take you up to production? And the big question, time frame. How long will all these things take?
So, according to our scoping study, the total financing requirement for our mine is about $400 million US. So it's a relatively large mine. I mean, it's by potash standards, it's very, very small. But
I was going to say, yes, it's not $4 billion.
No, it's not 4.4 billion or whatever the last one cost. So from that aspect, we've got a number in mind that is fairly clear. It's relatively low for the industry. In terms of how we go about financing that, the management team and board that we've put in place at Emmerson has a lot of experience raising money for projects like this. So we've raised in excess of $500 million for projects such as this. So we're pretty confident that we'll be able to find the right avenue to finance it. But I think one of the things that's very clear with a project with the kind of metrics that Khemisset has is there will be a huge amount of strategic interest in this project. And that is from people who are playing in the fertiliser space, particularly in the downstream NPK manufacturing, so manufacturing the value-added fertiliser products, who would like to control a source of potassium for that pipeline of manufacturing. And we've already started to see some interest from groups that are playing in that sphere.
Do you mean they will actually put some funding forwards for you?
Absolutely, that would be the discussion that we're having.
Fantastic. So it's not just debt, equity, it's players in the market as well.
Absolutely. The strategic angle, I think, is one that we sort of see, I guess, the best opportunities at this point in time.
Okay. What needs to be built and over what time frame, and can you put a cost, even a ballpark cost and all the big parts of the jigsaw puzzle which need to be put together for us?
Yeah. Well, the total cost of the project itself will be $400 million, and that includes, so we're building a large underground conventional room and pillar mine, very similar to what is used in the majority of the potash industry. It's also widely used in the coal industry. So a very well understood mining process. And then once the ore is above surface, it's a simple conventional processing flow sheet above ground to deliver us our K60 MOP product, which is the saleable product used in the potash industry. So in terms of getting us from where we are today to the final investment decision and the point at which we raise that big amount of money, be it debt and equity or some mix of the two, we don't need to spend a huge amount of money. I would say sub $5 million, of which we already have about $3.5–4 million on our balance sheet. So we're fairly well funded to deliver a significant amount of news flow and forward momentum on this project. We definitely will need to raise a little bit more money, but it's not going to be $20 million worth of money to get us to that point. We're already starting the conversations with various different providers about how we go about financing the larger amount of capital, and that will be an ongoing process for the next 12 months or so.
But you're still quite keen to get some retail investor interest into this project?
Absolutely. The retail investors are the reason why we're here. We're a small story at this point in time, probably below the radar of most institutions. But really, the retail support is what's made this company thus far, and so we look forward to continuing to receive that support and involving them as we tick off the milestones.
Okay. The potash has been discovered in Northern Morocco, but that's not the only good thing about Morocco. It is a benign business environment, as you mentioned. So stack up the Moroccan story for us, if you will. Why Morocco?
Yeah, so I wouldn't even say it's benign. I think it's absolutely a positive investment environment in Morocco. And in fact, Mining Journal puts out an annual risk report, which ranks Morocco as the #1 investment jurisdiction in Africa. And I think if you have been there and travelled there and felt the climate of Morocco geopolitically and business-wise, it's fairly clear that this is one of the most progressive countries in Africa. And that's been in no large part driven by the government of Morocco trying to attract foreign companies to come in and invest in the country. So it is an outstanding jurisdiction for us to invest in. Very, very supportive from fiscal regime, very, very supportive on the legal and regulatory framework that governs the way mining companies operate. And just generally the people of Morocco welcoming a company like us to come in and build what is essentially going to be a very large project in the scheme of Morocco mining. We have seen nothing but positive reactions from Morocco and generally.
The potash grade in Saskatchewan and Russia is high grade. It's less so with you, but you're convinced that there are other advantages that you can take advantage of in Morocco. So explain why grade is not everything.
So you're absolutely right. The Canadian grades are more than double the grades that we would see in Khemisset. And what I say to people is, what that means is, on an operating cost basis to mine gate, we will be higher cost than the Canadians. It's absolutely irrefutable, and we don't shy away from that fact. And in fact, we actually put that up in lights and say, yeah, we agree, our costs to mine gate will be higher than the Canadians to mine gate.
There's a but coming, though, isn't there?
But if you look at the structure of the industry, and if you look at the cost structure of the industry, more than 70% of the Canadian potash miners' delivered cost to their customer has nothing to do with their mine. It's to do with transport, logistics, and royalties. Three things where we are incredibly competitive with the Canadian operators. And in fact, we've done some analysis in our presentations that we put out to the market that shows we think on the low side that advantage is worth $70 a tonne to us, and on the high side that in today's market that's worth $135, $140 a tonne to us. That is a huge advantage in a market where the product is only worth $360 a tonne. So really, I go back to the two comments that I've been making since I started this, that the two most important attributes of a potash project in order to be a successful development project are #1, capital cost to production. If you can't clear the capital cost, having low capital cost to production hurdle, don't even bother trying to build a potash mine. And the second is location is the most important aspect in terms of your being competitive in the global potash market, because transport and logistics makes up such a large proportion of the rest of the industry's costs.
So where do you see your main agricultural market then, from Morocco?
So Morocco is, as I said, one of the fastest growing import nations for MOP in the world. That's driven fundamentally by a local Moroccan company called OCP, which is one of the world's biggest fertiliser companies. So they're importing a huge amount of potash at the moment. So Morocco is an obvious market for us. Again, if you look at the transport and logistics for us into Morocco, we would be by far the lowest cost producer into that market. And then looking further afield, anything on that Atlantic corridor, we have a significant transport and logistics advantage into. So we're talking South Africa, Brazil, even New Orleans, Louisiana, so the southern portion of the US, and of course Northwest Europe. Any of those markets, which represent about 55–60% of the global potash market, we would be very, very competitive into.
Okay. I'm going to ask you about funding the project, but you've partially answered that because you've said industry interest. But break that down for me. Who are you in discussions with? Are you looking at banks? Are you looking at debt equity? Just try and explain all the sources of funding, and then explain why a retail investor ought to put their money into you. What's the investment case?
Yep. So I think from a funding perspective, we are following every single avenue that's potentially available to us. So we're having a lot of conversations, and we're slowly working out how those pieces of the jigsaw puzzle might fit together. On the equity side, there is the usual method of going down the public markets route. Given where our market cap is today, it's probably not in the best interest of our shareholders that we pursue that, because the dilutionary impact would just be so great that it would be negative for all of us. On the other side, there are strategic discussions, so groups that have a strategic interest and requirement to secure a supply of potash. We're talking to a number of groups in that sphere, very early stage discussions, but that will continue right up until the last minute before we start to build this mine. Debt and equity, the debt side of the potential investment puzzle, traditional project finance banks. So myself and Phil Cleggett, who's another member of the management team, we actually financed through project finance another potash mine located in Spain. So we're very, very well acquainted with the project finance banks who would be able to finance this. We've already started discussions with those groups. And then there are some alternative financing sources, some groups which offer different things, some flexibility, potentially larger sources of capital, but non-traditional, what I would call non-traditional sources of financing. And again, we're having some very interesting early stage discussions with them. The quality of the project is such that we have had a lot of interest in potentially being involved in this project, as we would expect from the numbers that we've put out. It's very rare that you come across a project which has the financing characteristics that the Khemisset Potash project has.
Hayden Locke, CEO of Emmerson, thank you very much for joining London South East today. That was absolutely fascinating. Okay guys, you heard it here first. For more interviews like this, please click on the London South East logo at the end of the video to subscribe to our YouTube channel. Thank you for watching.